Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
This is a show where we help you understand the closing action on the D Street. It turned out to be a weaker day for the markets as the beginning of the week itself. We've seen that 21,660 can be seen on the Nifty right now. Even though it's off the lowest point of the day, you can still see about a 0.5% of a fall on the Nifty. The benchmark index, the Nifty Bank, in fact, has seen a sharp knock in trade today. 1.6% higher in trade for the Nifty Bank in trade. And you can actually see a very sharp fall on this one, and it's across the board, be it PSU banks, financial services, private banks, all of them are seen declining in trade. Barring the IT and the healthcare space, rest of the sectors have all slipped into the red, as was seen in the morning market trading session as well. Shell, looks like the markets hardly moved. It's just the IT and the healthcare pack that's remained in the green, but rest of the pockets are seeing sharp bouts of profits being taken off the table, whether it's the PSU space or the realty space that has so far seen such a sharp move, and the banks have still not performed in trade today.
Yes, actually, I think something painful needs to be highlighted up front. So Monday begins on the back foot as far as the Nifty and the Bank Nifty is concerned. In particular, the Nifty Bank, the losses on the Nifty Bank are 3 times that on the Nifty, and this 1.7% cut on the Nifty Bank takes the index, Sakshi, for the moment to almost at 200 DMA. That's the painful point I am trying to make, and this is not good. This is not good because the loan sector, which was pulling the Nifty Bank higher, despite continued weakness in HDFC Bank, Axis Bank, ICICI and Kotak, was SBI. You've seen SBI correct fairly sharply. You've seen PNB down about 3%, and let's look at Canara Bank as well. These are the 3 stocks that were the mainstay of bulls as far as the Bank Nifty is concerned. All 3 of them are under a bout of, let's just say, profit booking. This is not a correction.
Yeah.
So this is what is happening, and this 760 point cut on the Bank Nifty is now precariously around the 200 DMA. If that breaks, that's a sentimental negative for the broader rally that we are in the market. If you remember, we had started the broader market with 7 out of 19 indices in the green. Well, the things have gone worsened from 10 a.m. till now. Now just 3 or 4 indices are in the green, and the top loser is the Nifty PSU Banking Index, Sakshi, down 3%. So this is not looking good.
Yeah.
And the fact that nearly a dozen, if not more, PSU shares are down anywhere between 20 and 10%. So that's where the correction is setting in based on earnings. Earnings have disappointed, and that's led to a very sharp bout of profit booking. We can also show the Nifty CPSE index. That will show you the pain in the market as to how the market at the moment is grappling with not exactly losses, but let's just say profit bookings actually.
Absolutely, 3% down for the public sector enterprises index right now, and that's where the pain is emerging from. So be it stocks that we were mentioning early in the morning from the power space to now NHPC, 13.5% down. Let's pull up that stock. The company has just reported its earnings.
Yes.
NHPC has recorded a lower profit vis-a-vis last year. It's now come in to the tune of 546 odd crores, which is of course lower from around 750 odd crore rupees that was seen in the previous year, same quarter. Even the revenues have come in to the tune of 1697 odd crores down from 2,272 crores in the previous year's perspective. So you see a sharp downtick, 17% down. It's falling more as we speak at this point in time. The way that these stocks had rallied with the kind of power theme playing up had surprised many, and the way it's now reacting after the earnings will also surprise and shock many people. 79.5 right now on NHPC. That's the stock that we need to continue to watch out for. Let's welcome our guest on the show. Kranti Patini joins in, equity strategist at Wealth Mill Securities. Mr. Patini, good afternoon. Good to have you with us. Tell us, what do you make of the kind of sharp fall or the sharp bout of profits booking that we are looking across the board on the PSU stocks? Is this the beginning of what could be an extended correction, or how should you really view this?
Hi, Sakshi. Good afternoon and good afternoon, Shai. I don't think so, Sakshi. It is a correction. We better to call this kind of market reaction in right now as a market is entering into a consolidation phase. Most probably, market is going to be a range bound for some more time. And what we can see is markets are rallied sharply. We can say many of the stocks in PSU universe and many of the mid and small cap stocks, they have been rallying vertically. So some kind of profit booking is warranted, and markets have been. There are some stocks have been waiting for a reason to correct. That's what we have been witnessing right now. We can see some kind of profit booking, broad based in these names, like especially the PSU stocks. They have many of the stocks have rallied way above their valuations. That is the reason we can see some kind of sharp declines in these stocks. Still, there are some value buys are still available at this point of time also.
Right.
One need to be very stock specific at this point of time.
Right. Sakshi, let me just show you how the market is thinking. The PCR will draw a chart of Bharat Forge. Bharat Forge, Sakshi, is the top loser in the F&O space, 11% lower. Now you would imagine this is coming on the back of earnings. We had highlighted in the morning that Bharat Forge is something that we are looking at. Here out the earnings. Third quarter profit for Bharat Forge is 380 crore rupees versus 290 crore rupees a year ago, right? Third quarter revenue is 2,260 crores versus 1,950 crores, right? Both numbers are fantastic. You would have imagined EBITDA margin is lower. That is also not the case. EBITDA margin for the third quarter is 29.3 versus 27.4 year ago, right? And EBITDA is higher. It's declared 2.5 rupees dividend per equity share. Okay, ignore the dividend. Now look at how the stock is performing. Down 10%. Now I'll give you another important data point as to why this stock is down. In the second quarter that came on 6th of November, Sakshi, the counter was at 1056, right? From 1056 it rose all the way to 1324. यानी कि 30% रिटर्न आपने 3 महीने में कमाया. Even if this company had doubled this net profit from the number that I have mentioned, it would have still corrected. So it is a corrective phase of the market, and if the earnings are disappointing, then the fall is 20%. If the earnings are good, then the fall is 10%. So one must understand that valuations and prices are coming back to how should I say, sanity levels. One thing very good we used to learn in the markets is that when it's a roaring bull market, never presume that trees grow in air. They always grow on ground. And once the market starts to correct, it does not mean that the earth is going to end. तो हमने पेटीएम में -20, -20, -10, -10 देखा है 4 दिन.
Sure.
Right? Even at this point of time, lots of people are thinking कि
there is value.
There is value. So this is a corrective phase of the market. It's a profit booking that's happening. दिल में धड़कन जरूर होती है, लेकिन ऐसा नहीं कि हार्ट अटैक हो जाएगा. क्रांति जी, मैं गलत तो नहीं कह रहा?
Sahil, you're absolutely correct. Absolutely correct. Sometimes in market we lose senses. Okay, so when we come back into senses and look at the valuations and how the stock behavior, sometimes because of the excessive euphoria, that's what we discussed last time.
Yes.
So whenever the excessive euphoria come into the picture, we forget market tend to ignore the valuation matrix, and at some point of time, both get balanced. That's what the consolidation. That's what the correction phase that comes. But Shall, given the kind of liquidity that's playing around in Indian markets, I don't think so. We are going to witness a strong, sharp corrections. Going to be much more stock specific action that's going to take place wherever the earning visibility is strong and management commentary is good. Those stocks are going to bounce back quickly, and there is a lot of amount, a lot of liquidity has been waiting in the sidelines to get into
Absolutely.
the markets. So any kind of sharp decline in Indian market, definitely we are going to see a strong recovery in the market going ahead, Shail.
Okay. Kranti, since you strategize the equity flows into wealth mill securities, what are the two or three stocks that you may have on your buy list which have become juicier over the last 2, 3 trading sessions and possibly will become juicier still over the next 2 or 3? What is the name of those one or two stocks that you would like to buy at declining levels?
So, very interesting question. Right now, the mouth-watering levels we are not witnessing. Very honest with you. Still, the valuations little bit stretched. Okay, the valuations are yet to come into the mouth-watering levels. Right now, the bargains are very difficult in this market conditions. What we can see is because of the earning visibility of these stocks and the momentous nature of these particular stocks, we have been watching. But in these markets, mouth-watering levels are extremely difficult, Shail. Probably, if the correction or the consolidation deepens, we can see some kind of mouth-watering levels at this point of time. But there are interesting stories are still there due to today's correction in the due to today's sharp declines. We can see the Cochin shipyard after the
Yes.
split and today's correction of 7 to 8%. The stock looks interesting at this point of time, and we stick to large cap, any quality ones. If they get if we can get a sharp declines, we tend to get into those stocks at this point of time, Shell.
Okay. So, anything from the PSU basket that you believe is worth a buy in this kind of a dip, where you still feel a lot of value can be seen? The entire PSU power space is down. We named NHPC, Power Grid, NTPC, Coal India, ONGC, you name it, all of them are down right now. Do you see any player which one can really bet on even at these levels?
So actually, one thing is we have been watching these stocks and one day decline of 10-15%. But the way these stocks have multiplied from the base, from the bottom, has been humongous. So probably all the majority of these stocks have went up by on an average 80 to 200%. But what we are seeing is some kind of knee-jerk reaction right now, some kind of profit booking. So there is no need to absolutely buy and jump to buy these stocks at this point of time. Uh, uh, Most of the momentum players and the traders who have ventured into these stocks probably their stop loss would have triggered by this time. So for the investing, I don't going to jump and buy these stocks at this point of time. Just wait and watch. Wait for the levels to come and look at the valuation matrix of these companies, and also the earning visibility, extremely crucial for these stocks. So still, just to look at the names, I still stick on to the large cap PSU banks like State Bank of India, Bank of Baroda, and the remaining we'll just wait and watch at this point of time. Just to name Canara Bank, if there is a correction, we can get into when the stocks comes to into attractive valuations, we can get. Till the time, okay, there is no hurry. Markets are not going to go anywhere. We can expect probably this can be a consolidation. But at the same point of time, because of the liquidity in the market that has been waiting from both from the DIS, from the foreign portfolio investors, we can see sharp bounce backs also at this point of time. But our strategy is uh, buy on decline, have a staggered manner approach. That's going to continue. But what one thing I'm sure, Sakshi, Indian market, whenever there is a sharp decline, sharp correction, it never disappoints the investor if the buy on dips in Indian markets.
ओके हिंदी में कहावत है आपके मुंह में घी शक्कर. अब बाय ऑन डिप्स जैसे ही लागू होता है व्हेन द निफ्टी इज 100 पॉइंट्स अबव इट्स मोस्ट रीसेंट लो, देन क्रांति विल हैव दिस कोरियर टू यू. फोटो ही भेजेंगे because these are days where people count calories a lot instead of enjoying life, eating chaat. We are actually planning chaat pe charcha. So we'll send you a very nice image of shakkar and ghee, so that everything is maintained, your
Yeah.
fitness regime, and from our side a gift.
Thanks, Shail. That's the best gift you can give.
Yes. So let's try and understand what Kranti is saying in terms of how it's impacting a stock. Let's look at NHPC, Sakshi. I'll request the PCR to draw maybe a 1 month chart of NHPC. So from 70 rupees when the stock was at 18th of January, it went all the way up to 115. Yes, correct. So the low that you see at the bottom corner is 70 rupees, and this one was on 18th of Jan. And from then on, it peaked to about 115 rupees on 5th of February, the peak that you see. And from then on, it's corrected at about 82, which is now, right? And Sakshi, mind you, the low today is 77.
Yeah.
And this is not a FNO stock. So after 5-6 days of correction, the low at the moment is not the low. So it's sort of come up. Now, this is not to say that you should be buying NHPC, but I'm just trying to make a point what Kranti has said. Unfortunately, I can't draw moving averages on this one. But Sakshi, what happens is when the stock moves far away from its leash, which is the moving average, it corrects towards it.
Yeah.
And now the correction is 81 rupees is a perfect, not many people track this, but it's the 34-day exponential moving average. Why 34? It's a Fibonacci number. So there is not much of panic really in the market. So from 110 or 115 rupees to 81, that's 19 plus 15, 34 rupees. I think 33% correction हो गया. अब देखते हैं 1-2 दिन में क्या होता है. This is not to say that you should buy it now, but all I'm trying to say is that there is always sense in the market on its way up as well as on its way down, and one must appreciate people who sell at the peak. They know that ज़्यादा हो गया.
So true.
So that's how it is, and let's see what happens tomorrow. Please note down the fact that today's low was 77.85, and we are still about 37 minutes away from the close. Let's see what the close is. And then we will see what the open is tomorrow.
It's already picked up from like 18% low that it had hit today. So it's now 15.5%. We'll continue to watch out for this one. Let's look at the bright spots then. Even in this weak sentiment, there are a lot of bright spots that I can look. IT, healthcare, like I pointed out, these are the two moving parts for the markets. On the Nifty, so it's a pharma space like Dr. Reddy's, Divis Laboratories, Apollo Hospitals. These are the kind of stocks that are moving up. FNO space has Zydus Life along with it, that's moving very, very sharply in trade. Apollo Hospitals, that's another one that's moving up. How would you really look at the healthcare pack, Kranti, and would you recommend any of the stocks even at this stage?
Yeah, they have been sustaining Sakshi at this point of time, and for a longer term perspective, Sakshi, definitely we have a buy call on these names. But the staggered approach is extremely important for these stocks. The valuations looks okay, but to get the extra alpha, if there is a small correction in these stocks, as the broader indices is getting corrected, especially names like Apollo Hospitals, the earnings are quite good for this quarter. So any sharp decline one can start accumulating these stocks for a medium to long term perspective. Definitely not for short term.
Sakshi, yes. And Kranti, before you joined us, we were in conversation with Mr. Nishchal Maheshwari. He's the CEO of Centrum Broking on the institutional equity side. He also mentioned that the long-term move is towards hospitals over the next a decade or so. And this probably may not be a zone to buy, but this is not definitely a zone to exit. So there's a long-term story building in all hospital stocks. Look at the new highs. You have Apollo, you have Narayan Hridayalaya, you have Medanta. These are the three large hospital chains of India. And you have a host of small hospitals, like Yatharth, like Artemis, like Fortis. Well, Fortis is not exactly small. But the point I'm trying to make it that it's a sectoral move that's coming into all hotel stocks. And if you are invested, this probably will not be the time to book profits. Actually, another point I'd like to make within the PSU basket, there is a lot of differentiation. You remember Mr. Maheshwari mentioning that he would go towards defense companies
Yeah.
which are working for the Indian Army
Yeah.
and avionics.
Avionics.
Now just look at the fall in Hindustan Aeronautics. I'll request the PCR to show that counter to you. It is 1.41%. Absolutely, matlab,
Minor.
it's not even, yeah, let's just use the word minor. Okay. This is HAL for today. Okay. Let's look at BEL. And let's look at the three shipyard companies, Cochin, Garden Reach and Mazgaon. So those are where the losses are on the higher side because valuations had sort of, zoomed much, much higher. So even in PSUs, the market is differentiating between what has been richly valued and what is atrociously valued. So atrociously is going through the grinder and richly is correcting minorly. Sakshi.
And for HAL, the earnings have come out and it's pretty decent. It's good earnings only. If you look at net profit, that's jumped 8.6% to 1253 crores. Revenue is up 7%, 6061 crores. EBITDA has sharply improved, 45.5% higher now at 1434 crores. Margins have improved very sharply from 17.4% to 23.6% as well for HAL. So strong updates, and despite that you can see just minor profit booking really taking place for some of these companies as well. Let's look at Paytm again. 3.5% uptick is what we can see on this one after the stock had fallen about 35, 40 odd percent over the last few trading sessions when we did see that fall come through. Of course, choppiness all the way, but it's still ticking higher. Kranti, have you revisited this stock at these current levels? What have you advised your clients who may be making calls to you as to what is to be done with the Paytm now?
The existing investors who have already invested, we are just holding the positions actually. That's what we have been educating. As for the fresh investments are concerned for Paytm, only for the high risk appetite investors can get into the names like Paytm at this point of time. We need to see some more clarity has to emerge how they are going to handle post the RBI ban that come into effect from the March. Okay, so how the operational challenges they're going to address, that's where the key concern at this point of time. Since the stock has corrected sharply, the valuations look stretched, but this is not for everyone, these kind of business models, only for the high risk appetite investors who can take more risk, can venture into these kind of names at this point of time, Sakshi.
So this is how markets are ticking. Remember the low of 395 on this one, Sakshi, 3-4 days ago. We haven't seen that coming back. Now, whether that will happen in SGVN and NHPC, only time will tell. But the market is a great arbiter of how value is perceived at both ends of the spectrum. And don't forget, lot of funds are launching energy specific thematic schemes. For them, this is a golden opportunity. Whether they will buy or not, I don't know. But it's a God-sent correction for them.
Oh yes, because of the FOMO that they may have felt all across last 6 months odd or so.
115 pe, I'll just tell you the volume of NHPC. My apologies for sort of putting that stock again in front of you, but the volume was 60 crore shares in terms of the trade that was done. At the moment, of course, the volume is still above the 5-day average, but the point I am trying to make is that sometimes these corrections are godsend for people who have been patiently waiting with their arms overstretched and money out कि भाई थोड़ा नीचे आ जाओ. So that's what it is happening. Look at SGVN also. The reason why we are discussing these two stocks is because they are the highest traded stocks in terms of volume today on the Bombay Stock Exchange, on the National Stock Exchange. So 170 is the peak 6 sessions ago, and we are at 112, down about 20%. So that's how it is. This is a falling knife. Let the knife stabilize. Let's see what happens. Let me just mark the volume for you as far as these two counters are concerned. It's fairly substantial. Sakshi, would you just mark the volume? I am just trying to get this thing up and running.
Okay. You know, there's one more stock that I was tracking, Shell, and that's APJ Surendra Park Hotels that made its debut in trade today. And it's still up about 29% at 199 rupees or so. Remember, it made a premium of 20% listing in trade today. Kranti, have you taken out a note on this one? Did you have a conversation with your clients on this new IPO that's come about?
Yes, actually, all the stocks, hospitality stocks, the travel and tourism, the hotel space has been doing extremely good. We have these stocks have been sustaining in these markets also. We have not witnessed any kind of sharp declines in these names. So the given the kind of geography, Apajay Surendra Park hotels have, it's look very interesting at this point of time. For a long-term perspective, one can keep this stock on the radar, but we need to wait and watch how the next couple of quarters earnings are going to pan out. The hotel stocks like Sami Hotels and the other IHC, all hotel stocks have been extremely good at this point of time. For a longer term perspective and a medium term perspective, since the stock has been listed on a day when there is a sharp decline in the mid and small caps space, and the stock is listed at a 20% premium, one can buy the stock for a medium to long term perspective.
Okay, this is the view that's coming on the newly listed Park Surendra Group of hotels, and at the moment still at about a 20-25% premium to its IPO price of I think 150 rupees. So coming back to volume, NHPC has 3,139 crores worth of transactions done at about 14% lower. We have SGVN down 20%. Now it's been overtaken by many stocks in terms of volume, but still it's about 1393 crores in terms of volume. Zomato is doing very well, Sakshi. In the top 20 most actively traded counters on BSE, on National Stock Exchange, only Zomato and Wipro are in the green, 18 are in the red.
Wow.
So that's something to really look at in terms of the relative outperformance of Wipro and Zomato versus the broader markets. But what we'll do is we'll take a very quick break, and on the other side of that break is waiting our Lady Luck, which is Vaishali Parekh, and of course Kranti would still be with us. We'll be discussing this Monday move, the first day of the week, starting on a back foot as far as the Nifty is concerned. 3 times the losses on Bank Nifty compared with Nifty. We'll be back.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi Batra, with me Shel Bhatnagar. We are in conversation with Kranti Battini of Wealthman Securities, and joining us now is Vaishali Parekh, AVP Technical Research at Prabhudas Lilladher. Vaishali, good afternoon to you. Good to have you with us. The markets are in a profit booking mode as of now. What are you going to be doing? Are you going to be sitting and watching till the time this plays out and again the run-up starts, or are you still buying a lot of dips in this market?
Very good afternoon, Sakshi and Shell. Yes, of course, this was called for. I mean, after seeing such a good run up, well, though we are not happy about it, but yes, it was on the anvil. Yes, so well, market is on a corrective move, so I'll wait and watch.
Okay.
Because
So
this is the first day that we have seen mid cap very decisively falling. So also is the case with Nifty and Bank Nifty breaking the crucial support levels for now. So I would see that there is a possibility of markets sliding further down.
okay. Good afternoon, Vaishali. And just before we introduced you and we were chatting before the break that our Lady Luck is about to join us, and here you are.
Thank you, Shel.
So tell us what looks good, even on the short side. क्या फर्क है, पैसे ही तो बनाने, शॉर्ट करके बना लेते हैं.
Short term में देखिए, like say on the buy side, I'm looking at the IT stocks. So today we have recommended Coforge and Wipro. So these two stocks look promising right now. As far as the sell is concerned, well, Bank Nifty itself was a sell strategy. So that itself, banking stocks are looking weak to me. Leaving besides SBI still holding well, but the other banks are looking in for deep corrective move. So yes, those were the two sectors that we were looking at.
Okay, let's look at Wipro. In fact, I just pointed out about 5 minutes ago that in the top 20 traded counters by volume, there are only 2 stocks in the green. One is Wipro, 2.5% higher, the other being Zomato. Sakshi, there's a huge valuation differential between Wipro on one side, HCL Tech, Infosys and TCS on the other side. So that is something which I think the market is now exploiting. I'll give you some fantastic data as to how these 4 stocks have performed over a 1-year period, and that will show you how Wipro has lagged behind the top 4. Okay, here it is. So Wipro is there's outperformance here, maybe I'm mistaken. So okay, yes. Compared with the mid-cap space, HCL Tech is up 50% on a 1-year basis, where Wipro is just up 24. So that's probably a another 100% uptick if these valuations were to meet. So Vaishali, where's Wipro headed on the charts?
So well, for now, I would just take it as a trading strategy. 490 would be my stop loss, and I would look at a target of 520 to start with. So that's how I'm looking at Wipro. But for a longer term perspective, I think the way we are looking at the chart, I won't be surprised if we go towards 550, 580 levels from here on.
Okay. Kranti, would you have anything to add on Wipro in terms of a long term buy?
Yeah, Shail, the investors want to take a position in IT space. Wipro can be, the margin of safety is pretty much high with respect to Wipro is concerned. But we, on a fundamental basis, Shell, one warranted rate cut from Federal Reserve, that is extremely crucial for the IT stocks to increase their budget, and we to see a sustained margin recovery and the earnings to um, shoot up. That's where the key trigger for the IT stocks are concerned. But for a longer term perspective, given the kind of strong business models the large cap bellwether IT companies carry in India, definitely any dip in these stocks is a definitely it's a warranted buy for a longer term perspective.
Okay, Shall, you were mentioning about the shipbuilder stocks, and there is CMEC that's up higher, 5% up in trade, and that's on the back of earnings. The company has come into profits in Q3 from losses, and even the consolidated earnings on the top line have grown from 100 crores odd last year around same quarter to 213 crores. So this stock has shot up sharply higher in trade. Vaishali, would you look at the stock and tell us, is there momentum that can be chased on this one?
Definitely.
CMEC.
Actually, I see volume picking up, and well, it is unaffected by this market volatility right now. So I would wait for the stock to move about 12 right now. That is the level that one would look at, because that would be the level where a breakout can take place. So for now, 1212, or let's say 1220, we'll be a bit liberal with the resistance levels. That would be the resistance. Once we see a move past that, we can expect higher targets of 1250 and so on.
Okay.
This company Sakshi is in the business of, it's an oil ancillary. Just as we have auto ancillaries providing, tires to the main company, providing carburetors, wipers, so on and so forth. CMAC provides rigs and associated equipment to the main companies such as ONGC and so on and so forth. And it's a how should I say, predictable business which is not linked to the price of oil, and that's the reason why you see some good predictability in earnings. Now up, of course, limit up at 1195. Let's see what the all-time high for this one is. Most recent high is 1233, and all-time high में तो अभी बहुत देर है, 1411. So let's see how it moves. But this bull run over the last 6 months has seen the stock move from 600 to 1195. So that's how the system is at the moment. 313. Let's look at all-time highs on this kind of a day. That itself will provide you clues what strength is. So it's pharma and hospitals all the way, Sakshi. Zydus Life, 6.31% higher, 855. Medant, 1348, 6% higher. Dr. Reddy's earnings led 3% higher, 6338. Apollo Hospitals, 6620, 2.8% higher. To you, Vaishali, any particular hospital stock that you like as far as charts are concerned? Nearly all of them are at record highs. Narayan Hridayalaya, you have of course Apollo that we've discussed, even Fortis, Artemis Hospital, all of them rocking on the charts. What is your favorite?
So, well, Apollo Hospital, always the one that I would first start to choose with. So, well, we had witnessed this stock right at 5900. It had given a breakout, and we were pretty bullish on this. So, we continue to have a positive bias, and 68 to 7000 should be the next level to watch for.
Okay.
Just to add, for
yes,
the hospital
Kranti.
stock, we do like Rainbow Hospitals. Okay, any dip in the stock, because it have a different business model. Given the kind of young nation we are, India, the stock has been doing good. So any dip for the investors for a long-term perspective, one can add in their portfolio.
Yes, this is something really interesting to point out. Thank you, Kranti, for this one. Rainbow Children's Medicare, Sakshi, is 1251 for you. The most recent high being at about, I think, 1350. Till 3 months ago, when this stock was in the vicinity of 800, 900 rupees, Saurabh Mukherjee had come to our office, to our shows, and he had mentioned that he had added this in his. They have a Marcellus has a small cap portfolio. I forget the name of
Little
the
Champs. Or
Little
something.
Champs,
Little
correct.
Champs.
And that one was mentioned. Thank you, Kranti, for pointing this out. And the obvious question goes to Vaishali. Rainbow Children's Medicare, Vaishali. Do you see a rainbow on this one?
Definitely. I mean, thanks for bringing it to our notice because yes, it looks very appealing.
Yes.
Right now, the trend, the longer term chart is very bullish, and even the recent move that we are seeing is it's in the formation of higher bottom. So I would say yes, 1200 acts as a very crucial support, and if we see a sustenance of this stock, this is likely to go about 1350, 1400 levels.
Okay. While we are at this, let's look at what was the IPO price of Rainbow Children's Medicare. It was, the issue was somewhere like 1580 crore rupees, and of which 280 was, I think, offer for sale. Fresh issue was 280, and it was at 542 rupees per share. So that was the IPO, and let's see what the low is on this one. The low is somewhere like 1020. No, it will be lesser. Okay, it was low on the first 2 weeks only, 490. So it was available below IPO price also at some point of time, but अभी क्या किया जा सकता है? अभी तो we can just enjoy the rally, and Kranti brings it up, and Vaishali gives it a thumbs up. Sakshi.
Absolutely. Whole host of other moves that are now coming in. Okay, let's talk about auto ancillaries. Samvardhana Motherson. It's 7.5% down after the earnings. Here, even though the margins have expanded to 9.2%, consolidated profits have also seen, the revenues have seen an improvement to 25,698 crores for the company. What we've also seen is that for the profitability also, it's also increased on a year-on-year basis as well for Samvardhan to 542 odd crores from 454 crores. But despite that, 5.5% down in trade. Again, profit booking, but is this a buying opportunity, Vaishali?
So I would say it was actually, if you look at the stock, it has run up one way right from 86 levels to 120. So a little bit of retracement, of course, it calls for a buy. But I would say that market being the way it is right now, I won't be surprised even if this falls further to 105 or so. So better to accumulate in tranches.
Okay. It's actually Big Daddy. Bharat Forge is down 15%.
Yeah.
So you can't be sort of, cribbing with a 9% fall. The grass is always greener on the other side. And both companies have come up with fantastic numbers. But like I said, the market is in a different kind of a phase. As far as Monday is concerned, it's got off on the wrong side of bed. We're just saying sustained profit booking. The Nifty Bank is now down 1.8%, which is 817 points. What is going to be the closing? Is it below 200 DMA? Then you have more pain points coming in. Okay. On days when the market is correcting, my software doesn't want to work.
Not in the mood. So we've broken the 21,600 mark on the Nifty on the downside. 0.8%, 0.9% of a fall is what you see. Almost a 200 point downtake. The Nifty Bank is now at 800 points down, 44,826. And even for all the sectors that are trending down, it's only the IT pack that's holding up 0.6% and the healthcare pack that's 0.4% higher. The two wheels on which the markets are still going at this point. Vaishali, do you further see a crack further down from these levels going forward on the markets?
Well, I would think so because 21,700 was the main make or break area. And now that we are below 21,750, I would say, and now even
Guys,
below
do we have a morning
21,600,
commentary?
I think it would be going towards 21,400 for now. And Bank Nifty also, we need to break the previous low because it's just holding on to the 200-day moving average. And we had seen the previous low of 44,400 levels. So if we break those, I think it is likely to go even towards 42,000 levels. So, well, we take one step at a time. Let's not be so scared about it. But 24,400 in Nifty, and let's wait for 44,400 to break in Bank Nifty.
Okay. let's just try and fetch the morning commentary graphics if the PCR can fire. It's actually very early morning today. No, I was just looking at the Nifty options chain, and there was this gap that I noticed that at 21,500 there's a lot of bears coming into the picture, and I thought, should I mention it in my graphic or not? Then I thought कि इतना negative क्या सुबह सुबह होना, but something in me made me write that graphic. If the PCR can show in the morning that we had said, that 21,500 is an bears are building aggressive positions on 21,500 in the option chain. Maybe you will just see that graphic coming in, and I am unpleasantly surprised that 21,500 has come in the next 4 or 5 hours so quickly. But that is how the market is, that mid caps and small caps have topped out, and you'll just see it coming on the screen. This is what we had mentioned in the morning. I so wish we had taken a put of 21,500. Let's try and yeah, there it is, bears building aggressive positions on 21,500. I just want to see how the put has moved. Vaishali, maybe you can help us with it. The February 15th weekly expiry, 21,500 put, if you can point out. Okay, I
Sorry,
see
I
it.
don't see options. I don't see
Okay,
options.
okay. I have that data in front of me. It's at 94 rupees, Sakshi. It was at 50 rupees in the morning. Let me just get the right chart for you. Okay, maybe I am watching the incorrect one. You are showing the call. Let's watch the put. So obviously the put will be priced higher because the percentage rally has been fantastic there. Yeah, that's how you see it. It's doubled in price.
No.
Anyway, but not that we marked it in the morning, but at least we thought about it.
Yes, absolutely. And Shell, Mazagon Dock has come out with the earnings now.
Okay.
And it's now in the green.
Wow.
So consolidated revenues have gone up from 1816 crores to 2362 crores for the company in this quarter. Even the consolidated profits have jumped from 354 crores recorded last year same quarter to 627 crores recorded this year.
Kya baat.
And you can see fantastic earnings also getting rewarded. Mazagon Dock share has shot up 4.5% now, a sharp spike coming in just in last 1 minute or so. And it's a spectacular rally. Vaishali, what would you say?
Well, it has just been consolidating, nothing much happening for a very long time, but still the trend is very much intact. So I would say, well, we would observe a consolidation band between 1920 to around 2400, buy near the supports and look for the resistance level if we see a move past.
Okay.
Fabulous numbers.
Yeah,
What's
absolutely.
the margin? It's a 600 point basis point uptick on the margin. Q3 EBITDA margin at 22.82% versus 16.29%. Yeah, it's actually 4 plus 2. 600 basis point uptick on the margin. That's fantastic. And the market seems to be really in the mood to reward Mazagon Dock. Let's see what the low was for today, because that will give you the swing.
Yeah.
So the low was 2022, and it's so it's a 10% swing.
Wow.
Because you will calculate it from 2022 to now at about 22,100. So that's a great one. Let's see whether it's able to break that sideways spike that Vaishali so correctly mentions. The stock hasn't done anything at all for the last 3-4 months, but maybe it's just waiting for this earnings to come in, and let's see how it goes. Sakshi, as I said, my software is not working. Maybe you will have to help out with the long-term chart.
Absolutely. If we look at Mazagon Dock share and the long-term chart, you can clearly see, let's look at last 6 months odd. And I'll be able to share with you the kind of move. 19% it's moved up in the last 6 months. In the last 1 year, hold your breath, it's 212%. The kind of move.
1 year ki baat nahi. That is not in the picture.
But
Last
6
3 months it has done nothing.
Yeah, but last 6 months it's 18-19%.
Yeah.
Last 1 month it's been absolutely flat with a negative bias. In fact, 4% down in the last 1 month.
Okay.
So this is a dip that investors grabbed onto and they bought, and you can actually see a sharp move now.
Okay. So day's high is 22.18 so far. Let's see what happens. We still have 5 minutes left for the day. Vaishali, any BTST or STBT you'd want to do?
Hard to tell, but now that I'm seeing the chart, I think look at data patterns. That is picking up momentum after Moscow talks. I think data pattern looks good. And in the cash category, I also like Nazara. I was looking at Nazara while just before I joined you guys, and that also is showing some momentum. So Nazara is a stock that I would look at right now. It's 867, holding on to its support levels. If it gives an up move, I think it can go to 890 levels. So that would be my BTST.
Okay, Nazara par nazar or data patterns per pattern. Chalo, that's really good. Nazara is right there in front of you on the screen, and data is moving from its day's low of somewhere like 1836. Kranti, anything that catches your eye which we could look for tomorrow on the long or the short side?
Mazgam docket after the consolidation shell,
Kya baat?
we have been the net buyers in all the three names: Mazgam, Cochin, and Hindustan Aeronautics and Garden Reach. We like the defense theme. We have been quite bullish from past couple of years. Any dip in Mazgam docket can be a warranted buy for the investors for a medium to long term perspective.
Okay, Sakshi. Now it's 3:27. Let's start wrapping up the index. We have a 160-point cut on the Nifty, 21,622. This is possibly the day's low as well. There is no respite there. The Nifty Bank is down 750 points, 44,900 for you, in the vicinity of 50 points to its day's low. What's really good is the IT index. 280 points higher, 37,980. This is what is providing support to the beleaguered market, both in terms of indices as in terms of the main index. We'll break up the Nifty for you. This 161 point drop. ICICI Bank is contributing 26 points to the fall. ITC is contributing 18 points. State Bank of India 18 points, and Reliance and HDFC Bank respectively 16 and 11 points. What's helping the Nifty on its way up? Infosys and HCL Tech 9 points each. Dr. Reddy's, Apollo and Wipro bringing in 3, 4 and 5 points respectively. In terms of sheer heavy sales, both in terms of price point as well as activity, it's the PSU stocks that have been clobbered. NHPC down 15%, 81 rupees. It's about 3,300 crores worth of shares traded. You have IRFC 13% lower, 133.60, 1,790 crores worth of shares traded. Yes Bank 10% lower, 28.25, 1,600 crores worth of shares traded. SBI 2.5%, 1,624 crores. SGVN 20% down, 111.45, and about 1,400 shares in volume. Sakshi, what have you watched?
Shell, another set of earnings. Skipper, that's down 7% odd. Here the revenues have doubled to over 800 crores. The profit has also nearly doubled from 9.5 crores to 20 odd crores. Stock is down 7% odd. Just now the earnings have just come, just 15 seconds back.
Okay.
That's what the earnings were looking like.
I think this is the Delhi-based builder.
Yeah.
280 rupees for you. Like I said, the market is in the mood to thrash everything that's there in front of it in terms of price and volume, irrespective of earnings. We'll just take a small detour into the FNO space. The top gainer is the pharma space. Zydus Life 6.5% higher. It's a blowout happening on this one in terms of price and volume. The open interest here is to the extent of 2.2% higher. We barely mark MRF because the ticket size is so high, but 1,44,897 बोलते बोलते भी इंसान थक जाता है. 5% बढ़ा है. The amount of rise is more than the stock price of many companies. 7,543 rupees to bada hai. And open interest is 8% higher. Astral, remember this is a stock marked by two people on our show in terms of fundamentally long-term picks. 1943, I think it was Mayuresh and Shunil Shah who had mentioned this stock. Dr. Reddy's 3% higher, and today's favorite by Vaishali, Coforge, 2.6% higher. This is also on the verge of a breakout, something to be watched at. Open interest is 10% higher. Sakshi.
Absolutely. Okay. Many thanks, Kranti. Many thanks, Vaishali, for being with us on this very special edition and sharing with us your thoughts. We'll see you very soon back on the street with hopes that again these dips are bought into and the markets come back into fine fettle. Today's day, definitely a down day, 0.8% down in trade, 21,612. So 21,600 is protected on the downside. On the Nifty Bank, it's 750 points on the lower side, 44,883 in front of you on your screens. Apart from this, of course, the Sensex is at 71,072. It's lower by about 0.7% odd. Among the other sectors that have lost ground today, you can see media index down by 4.7%, PSU banks down by 4.6%, so a sharp bout of profit booking clearly. Nifty small cap 100 index again lower by about 4 odd percent again. So the broader markets also losing very sharply in trade. Realty space 3.15% down in trade. Oil and gas 2.5% down. Mid caps 2.5% down in trade. Metals, Nifty Bank down by 1.7%, we already marked. Private banks, financial services, FMCG, auto, consumer durables, everything that's down. In fact, I can also see just the IT and the healthcare pack that pulled up 0.6% higher for IT index and half odd percent gains for the healthcare index. The top gainers on the Nifty, Dr. Reddy's, Apollo Hospitals, Divis Laboratories, Wipro, HCL Tech, LTI Mindtree. So pharma and healthcare, pharma and IT. On the lower side, it's Coal India that dropped 5% in trade today. The top loser on the Nifty, Hero Moto, BPCL, ONGC, Tata Steel, NTPC, and IndusInd Bank and State Bank of India lower in trade on the Nifty charts today. Of course, the F&O space stocks already marked out by Shell, Zydus Life, MRF, Astral, Dr. Reddy's. These were the pullers in trade today, but a whole host of other stocks that were lower. What we'll do is we'll wind down the market edition right here, but we'll stay tuned with hopes that overnight cues are positive and we can get another breath of positive air in tomorrow's market share. Many thanks, Shell, for being with us on this edition. Many thanks, viewers. मंगल है तो मंगलवार है तो मंगल होगा. That is what we'd say. Okay, many thanks, viewers, but do stay tuned. Action continues on the other side.
Thank you.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Congress expelling its well known